China has fired a major shot in the tech war, banning advanced AI chips from US giant Nvidia. This isn't a minor trade spat, it's a direct challenge to US dominance in a critical sector. The impact was immediate. Nvidia's stock dropped, and the entire US semiconductor industry was put on notice. Companies like AMD, Intel, and Qualcomm now face the threat of losing access to a market that makes up a huge chunk of their revenue. The message from Beijing is clear. China will no longer rely on US technology. This move is both strategic and retaliatory, following years of US export controls on Chinese tech. The stakes are higher than ever. This isn't about tariffs, but about the foundational technology of the 21st century, artificial intelligence. The ban creates a vacuum in China's massive AI market, forcing both Chinese and American companies to rethink their strategies. For years, Nvidia chips powered China's AI boom. Now, that supply is cut off. Chinese firms must find alternatives, while US companies face a fractured global tech landscape. The symbiotic relationship that defined the tech world for decades is now broken. The aftershocks will be felt for years. The question, what comes next for the global chip industry? Will American firms adapt, or will China's move reshape the entire sector? The world is watching as the tech war enters a new, unpredictable phase. The future of AI leadership is suddenly up for grabs. The US must decide how to respond. The game has changed. Why did China make such a drastic move? It's about national security and tech sovereignty. Beijing sees dependence on US technology as a critical vulnerability. US export controls have shown China that waiting for the next restriction isn't sustainable. China wants to control its own technological destiny, not just assemble products designed elsewhere. The government is investing billions to build a self-sufficient semiconductor industry. This ban signals a bet on Chinese innovation and a declaration of independence. Relying on US chips for critical systems is seen as a security risk. What if the US could just flip a switch and shut down key infrastructure? By mandating domestic tech, China aims to secure its digital ecosystem. It's a calculated gamble, short-term pain for long-term control. The hope is that forcing local companies to use Chinese chips will accelerate innovation and close the technology gap. For Beijing, the price is worth it. With Nvidia out, China is doubling down on its own chip industry. The government is pouring resources into a national moonshot to build a vertically integrated semiconductor sector. Huawei, once crippled by US sanctions, is now leading the charge with its HiSilicon division and Ascend AI chips. These chips aren't yet on par with Nvidia's best, but they're improving fast. Huawei and others are investing in everything from chip design to manufacturing. SMIC and a wave of startups are pushing domestic chip fabrication forward. The ban has created a guaranteed market and a powerful incentive to innovate. Tech giants like Alibaba and Baidu are now testing homegrown chips in their data centers. China still faces hurdles, especially in advanced manufacturing equipment, but it's investing billions to catch up. Progress is undeniable. China is proving it can't be stopped, only slowed. The race for chip supremacy is heating up. The world is watching. For Nvidia, the financial hit is massive. China made up a quarter of its data center revenue. Billions in sales are gone overnight, and investors are rattled. Nvidia must now look to emerging markets and double down on US cloud providers, but the loss is irreplaceable. Other US chip makers like Qualcomm and Intel are watching nervously, fearing they're next. The industry's global supply chain and business model are at risk. The bigger danger, losing access to China's dynamic AI market, means missing out on innovation and data. Meanwhile, China's domestic champions gain valuable experience. The ban doesn't just cut off a customer, it helps create a powerful new competitor. The US chip industry faces a systemic shock. The stakes for American tech leadership have never been higher. The world order is shifting. As the US faces a tech showdown with China, a new front opens: the war for talent. Proposed visa restrictions could make it harder for US tech firms to hire top engineers and researchers from abroad. The US semiconductor industry was built on immigrant talent. Many leading innovators are foreign-born. Tightening visa rules risks driving talent to Canada, Europe, or even China. This isn't just about jobs, it's about innovation. Silicon Valley's success is a story of immigration. Google, Intel, Nvidia all have immigrant founders. Making America less welcoming could trigger a reverse brain drain. The result: fewer startups, slower progress, and a weakened edge in AI and quantum computing. While China courts global talent, the US debates building more barriers. This self-inflicted wound could be more damaging than any trade ban. In the global race for innovation, talent wins. The US risks falling behind. The stakes are enormous. While the tech war rages, American workers face a new crisis: AI-driven job displacement. Automation is already replacing jobs in customer service, data entry, and even software development. Many workers are forced into lower-paying, less secure jobs as their skills become obsolete. The promise of AI feels like a threat to the middle class, fueling economic anxiety and political unrest. This cycle of disruption and backlash can push policymakers toward more isolationist, destabilizing policies. The challenge: retrain and support workers, so the benefits of AI are shared, not concentrated. If ignored, the human cost could undermine America's tech ambitions. The tech war isn't just about chips. It's putting the US dollar's dominance at risk. The dollar's status as the world's reserve currency has long given America economic power. But aggressive sanctions and trade wars are pushing countries to diversify away from the dollar. China is leading this shift, settling more trade in yuan and building a parallel financial system. Each new deal chips away at the dollar's dominance. If de-dollarization accelerates, the US could face higher borrowing costs and inflation. The exorbitant privilege may fade, eroding America's global leverage. The tech war could be hastening the decline of the very system that underpins US power. The consequences could be severe. Is the US strategy backfiring? The chip ban has hurt China, but it's also galvanized its tech sector and created new competitors. Meanwhile, US companies lose billions, the talent pipeline is threatened, and workers feel the squeeze. Even the dollar's dominance is under pressure. The US risks inflicting as much damage on itself as on China. History shows that protectionism rarely wins. America's strength has always been openness and innovation. An alternative: outcompete China by investing in education, infrastructure, and research. Building walls may only wall America in. The choices made now will shape the next century. Will this strategy secure America's future, or hasten its decline? The answer isn't written yet. The stakes could not be higher. The world is watching.